Hi there, welcome to GrainTV. I'm Kevin McNew. It's Tuesday, January 12th. That must mean it's the USDA crop report day. Let's take a look at GrainHedge's trading platform and see where we closed. In Chicago, it was a day for higher prices. Beans leading the advance on a 13.25-cent gain. Wheat in Chicago up 12.25, and corn lagging behind but still improving on a 5-cent advance. The USDA report, in summary, was neutral. The only sort of bullish factor out of this report was wheat seedings that we'll talk about in a bit. But overall, in all of the data that USDA provided, it was at best a neutral report. But we got a nice bullish reaction because of all the short covering that happened around this report. First of all, let's take a look at some of the key measures. Let's start with ending stocks or carry out for the U.S. And here we had just minor changes both in corn, soybeans, and also in wheat. Corn was slightly higher, beans slightly lower, and wheat slightly higher. These were not really big changes one way or the other. Some of them were a result of, USDA did lower corn exports by 50 million bushels, did lower soybean exports, but in soybeans, we had the benefit of a lower yield, slightly lower yield for U.S. production, and also slightly lower acreage. In wheat, we just had a higher quarterly stocks number that came out, which led to a expectation of lower usage. When we look at the quarterly stocks number, nothing surprisingly different here from expectations other than wheat. And again, that led USDA to lower their usage forecast for the year and inflate the ending stocks carry out. Now, let's shift gears and talk about South America. This is where we thought there might be, in the case of soybeans, a lower Brazil number. In the case of Argentina, a slightly higher number. There were some possibilities that we might see deviations in the corn numbers out of Argentina and Brazil. But overall, USDA just held firm on what they had in December. No changes here. So, we're still left wondering, what is this crop going to look like? And, when we look at the weather forecast, it looks very good, especially in the northern part of Brazil, where it has been dry. In fact, meteorologists are even starting to suggest that it may become almost too wet in this once dry part of the region. And so that could potentially have a negative impact. But, it's such a small area. It's so late in the growing season. It's hard to get overly excited about a region that was once dry that now is potentially going to be flooded. So overall, my take on this report is that it was very much neutral. We saw short covering that got the market at least a shot out of the gate after this report. We didn't do much after that, but we did at least get some higher prices. Let's turn now to wheat. Excuse me, and talk about the wheat number. Now, this was where we had a bullish surprise. Unfortunately, it happened in the wheat market. So the bullish surprise is that plantings for winter wheat for 2016 are substantially below at 36.6 million acres, substantially below the expectation at 39.3, and even below the lower range of 38.25. So that is a very good thing to hang your hat on. But the overarching theme in the wheat market continues to be well above normal supplies in the global marketplace. Our competitiveness as an exporter in the world marketplace is dismal. We have a strong dollar. We have stiff competition from the Black Sea region, and pretty soon it's going to start coming from South America. So there's nothing in the next 3 months that I think gets the wheat market overly excited. This may have helped at least temporarily hold a bottom, and we'll see if we can bounce higher. This is a very, very good number, but its impact, if it's going to have any, is going to be felt much later in 2016, probably more towards late spring, early summer, if we have some weather problems. Right now, we're just quagmired in burdensome supplies. Let's take a look at trading around this report, because I think this is very telling of what kind of rally we had here. Normally, when we see a bullish reaction to a report, we see an initial pulse up like we did today. This is the case of March corn, and you can see these are 10-minute bars. So in this 10-minute period, you can tell obviously when that report happened. We were trading at 349 a bushel on March corn, and we quickly within 10 minutes spiked up to 363. So a 14-cent range right away. Now, the rest of the trading day was pretty much consolidation and actually heading lower. So we actually cut that 14-cent trading range in half and only ended up 7 cents above the lows. To me, that's concerning. This is not a market. In a normal bullish reaction type of market, you may see this spike up, but what you tend to see is covering and more movement higher. You started to see that. You can see in those first 4 or 5 bars after the initial reaction, we kind of inched up higher and higher, but there was no carry through. We would have liked to have seen this market close at its highs, close strong on the day, and that would lead me to believe that this bullish momentum has some carry through potentially into the next few trade sessions. It's not to say it won't happen, but my take on today's close is that we will likely see very little follow through, and the overarching theme continues to be bearish. We had crude oil that nearly broke through $30 a barrel today. We just were hovering around $30 even prices, and we managed to close a little bit higher than that. But overall, the global commodity markets are in a depressed state. Stock markets are nervous because of China. You know, grains has been lucky because we have not we've been waiting for this crop report, and so my concern is now that we're past this crop report, which gave us no new real bullish news other than this, lingering 2016 wheat supply issue, but overall the underlying supply and demand factors are very bearish. So be cautious if you're a farmer. Don't fall in love with this rally is my take on this. Use this opportunity to catch up on old crop sales. I know many of our clients at Grain Hedge are, have been sitting on old crop expecting a rally. We just haven't got it today. Maybe we should view this as a gift and take advantage of that rally and start to sell in the market. If you have questions about your situation, give me a call, 877-472-4607. I'd be happy to talk to you about your own personal situation and how we at Grain Hedge can help you in your marketing needs. That's it for today. Have a great day and trade safely.